Look at this. What can you say?
The fact, it's a bull market when Strazza starts looking like a Cuban drug dealer.
What can you say?
It's
look at this view. How?
Strazza, get out of the way. Nobody wants to see you. Look at the view. Look at the view. Wow, look at that. Woo! Very nice, sir. Where the hell are you?
That behind us is actually the British Virgin Islands that you can see really well.
Okay, I was going to say, it doesn't look like Florida.
No, I'm on St. John. I'm on St. John. We're on the U.S. Virgin Islands.
All right.
Nice. This is my island shirt, so I'm going to wear it every day. Here.
Dude, you look good. You pull it off well. How's my voice doing?
You still sound like Darth Vader.
No,
dude,
it's definitely better.
I had a serious throat infection, man. I almost died.
Did you have strep? Like, what was your family infected with?
Morgan did, but she has tonsils. I don't. I don't know. But, I haven't been sick in like forever. So,
How many days could you not talk for?
It was really frustrating. As somebody who talks as much as I do, 3-4 days of no voice. I mean, it was bad. I mean, it's still pretty bad, which is a bummer.
What did you do?
It makes you appreciate your voice. I mean, think about it. I'm on the phone all day with investors all over the world, as you guys know. Like if I can't talk, that's a big problem.
No, I know. It was probably scary.
Yeah, I'm like, oh my God, am I ever going to be able to talk to Robert again or talk to Strazza again, or like all the people that like help me kind of figure out this puzzle? Like, am I going to have to type to them? Or like, I was like thinking to myself, is it like a robot voice that I'm going to have to use and they're going to be annoyed and they're not going to answer my phone calls? Like, that's what I was thinking.
No, it's scary. Your hands, your mouth, your eyes.
Yeah.
Essential body parts.
I can think of one more, but we won't go there. Let's get going there, Spencer. What do you say?
Okay.
Funny.
All right. Good morning, everybody. Welcome to the morning show. Spencer, Steve, JC, in that order, left to right on your screens. Here's what we got today. We got Kenny Glick, you got Sam Gatlin, and today's featured guest is Katie Stockton. She'll be on the show at 9 o'clock. She already sent us plenty of charts, so very excited for that. And we'll talk about some movers, maybe a little bit of Berkshire Hathaway here and there, and we'll see where things go. How's that sound?
I like it.
It's November. Happy November, everyone. Hope you all had a great Halloween.
Yeah, I didn't celebrate.
This is the the best month of the year historically. This is the beginning of the best 3-month period of the year historically. Yep. My voice, I apologize, guys, but I'm on the way up. My voice was in a downtrend, and now we have based over the last several days, and now we are breaking out to new multi-day highs. So we're getting there. Harmon there was saying JC was active on Twitter this weekend. Yeah, I couldn't talk to anybody, so I had to share my thoughts somehow. My wife certainly doesn't give a damn what I think about European equities. So,
it's pure torture for this man to not let him speak. I mean, right? Nothing worse for you.
People are like, JC, how do you do this morning show every morning? Like, how can you? It's like, dude, I'm doing it anyway. And, I'm calling Strazza. We're talking about the markets. You know what I mean? Spencer gets to join us. We have our friends. We got Katie Stockton on the show today. Guys, for those of you who don't know Katie Stockton, she is one of the best in the business, no doubt. When I talk about people who have inspired my work personally, she's definitely one of them. What you'll notice about Katie is that she is different than I am in a lot of ways. She's a lot more oscillator, indicator oriented than I am. She uses the Ichimoku clouds or the Ichiro clouds, as Kenny calls them. So she uses tools that I don't. And, to be honest, most of the technicians and friends that I have use things that I don't also, right? So it's cool because she's going to share some things and some viewpoints that you wouldn't hear from me or Strazza for that matter.
No, a lot of tools. Got to find what works for you. Katie, one of the great technicians out there right now doing it.
Katie, I kind of hate her in some ways because she had an unfair advantage. She actually took a technical analysis course in college.
Really? That is rare. That's really rare. Where?
That's like, and it's not like recently. I mean, that was decades ago, right?
Most colleges still don't offer something like that.
Almost all of them don't, right?
Yeah.
Almost all of them don't. So the fact that she was able to do that back then, that's like, cheating almost, right? So good for her. She clearly took it and ran with it. As you can see, she's managing an ETF. She's doing a great job. We're all rooting for her, obviously. So super excited to have her on the show.
Shout out Greenwich.
Shout out Greenwich. Yeah, she's Connecticut gal. Yeah, definitely.
So it's Palantir Day. Do I have that right, Spencer? I'm hearing in the chat.
Yeah. There's actually, you know what? Let me pull. I don't have my calendar pulled up. Let me.
Crypto's got hit while we were sleeping again.
Yeah, let's do
another Sunday night sell-off. Why does this keep happening?
You guys want to do a little state of the markets, get into the crypto?
Yeah, let's talk about
it. All right.
All right. I'm going to do my best here with my voice, but we got the Dow flat this morning, 47,680. New all-time high monthly close, by the way. S&P 500 up 0.25%, just under 6,900. Also new all-time high monthly close. NASDAQ 100 leading the way up 0.2%, 160 handles, 26,160. Also new all-time high monthly close. We got the 30-year bond futures, down a little bit this morning, 117 even for the 30s. Crude oil flat at 61. Copper up a little bit at 510. Gold up almost a full percent, back above 4,000. 40.30. You got silver up 0.5%, 48.37. Silver hanging in there pretty good, to be honest. With the volatility index up a little bit, 17.5 for the VIX, despite new all-time high monthly close for Dow, S&P, NASDAQ, Russell 2000, microcap, also new all-time highs. And over in funny money land, Bitcoin getting hit hard this weekend. Under 108 for Bitcoin, down 2,600 points today. You got Ethereum, 3,700 and change, down 5%. You got Solana, down 6%, 176. Total crypto market cap, Spencer Israel, 3.57 trillion.
Yeah.
So was there news there? What sent crypto tumbling yesterday? I've been a little bit out of the loop.
I looked. I mean, I didn't look like that hard, but I did look a little bit last night, and nothing jumped out to me. Did anyone see anything that jumped out to them? Like some big obvious headline?
You might get some movement in some of these new treasury companies. They're reporting today, it looks like, or at least dropping some press releases. Not seeing much. Not seeing much downside from the crypto equities in the pre-market either. So we'll see. But the action's not good, right? We want to see big up Sundays, not big down Sundays. Solana back down, testing those lows that, frankly, it's tested 1, 2, 3, 4 times already just in the month of October. So the more times the level is tested, they say the more likely it is to break. Do I have that right, JC? Solana just testing this big level over and over again, pounding on it. So the Bears might take some of these cryptos for now, it looks like.
If you had to buy one, what are you buying?
Man, I would look to buy some momentum off support, but would hate to buy something that looks like Solana, for example, right here today. I think in this market, you got to stick with the blue chips, though. Maybe Ethereum, but you're still anticipating pattern resolutions if you buy these here, right? You're anticipating something that hasn't come yet. So I'm getting more and more excited about energy, though. That's an area that I am getting bulled up on. I'm liking what I'm seeing. I'm liking the near-term action. I liked last week. I think it makes sense here, energy, JC, at this point in the cycle, as something that really hasn't worked while everything else has for so long. Ranging for years after a big move off the 2020 lows, just a lot to like.
I want to mention a couple of things. I agree with you on the energy. I bought 2 more energy stocks last week. I already had one.
Can you tell?
One was services, and one was a one was the services, and one is a.
The services.
I think both of them are services.
The services are the best names right now, which we like for years now. We've been saying, "Oh, the services. What's wrong with oil services? What's wrong with oil services? Why don't these work?" They've been not just laggards for the broader market, laggards within energy consistently, and now they're really waking up. Look at these short-term bases and like Slumberburger, Halliburton, really good stuff there. Even Transocean.
Look at the correlations. One was an E&P, one was an oil services that I bought last week. But
I'm going for that divvy. I'll bet you got a big div there.
No, I went down the class scale. No, I'm not getting shit. I don't think so.
You said E&P or MLP?
E&P.
Oh, okay. So you went offense. You went both the risk on groups. Love it.
Yep. But what I want what I'm noticing is that with energy picking up and Strazza now seeing a turn in energy, you're seeing dollar strength in that environment. So one of the questions that I've been asking is, can energy go while the dollar falls? And Jason, I remember talking to Jason. Jason's like, absolutely. That's what Jason thinks it's going to happen. But Jason obviously focusing on what is happening. What is happening is that energy is looking pretty good. Dollar's been strong.
And you have to ask, what does that mean for other things? Right? I think is kind of.
That's right, because if you remember in 2021, 2022, energy was doing really well while the rest of the stock market was falling apart. Dollar was strong, if you recall, right? And then once rotation went back into those other areas, people forgot about energy again. Energy went a multi-year downtrend and underperformance. So, listen,
no, JB, no, it's actually pronounced Schlumberger.
Schlumberger.
Yep.
Schlumberger. Yeah. You could call it Schlumberger if you want. Like, you could be one of these bougie guys that calls it finance.
Not here.
Finance.
Not on our show.
Not in our show. We don't call it finance. It's finance. All right. So you can call it Schlumberger if you want to be all bougie about it. But over here it's the old Schlumberger. Like, my mom gets mad at me when I call it Rodeo Drive. I'm like, yeah, Ma, I bought those shoes over Rodeo Drive. She's like, it's Rodeo. It's Rodeo. Say it right. I'm like, oh, on this side of the tracks, it's the Rodeo Drive. She doesn't
finance.
Schlumberger.
Get out of here.
Get out of here. All right.
I'm loving your voice these days, though. Can you keep it?
Yeah. Do I sound like Darth Vader?
You sound like in the world.
All right. Listen, we have new monthly candles this weekend, which to me is like the best thing ever. Right? New monthly candles. Freaking love them. I couldn't talk to anybody this weekend, so I was charting a lot this weekend.
Who won best candle? Who won best monthly?
I got 1, 2, 3. I got 4 of them for you. Let's start with Fonz's, and then we'll get to mine. This one comes from Fonz, right? And shows the Dow, S&P 500, NASDAQ 100, and Russell 2000 all hitting new all-time highs.
Chart on.
Throw it up. That's your cue to throw up. There it is. So this was Fonz's chart. Great set of charts from Fonz.
It's probably a bull market if this is happening. Is that right?
Jeff DeGraff was out this weekend or late last week talking about market breadth, hot topic these days. And his argument was that, very simply, and I hold Jeff DeGraff in very high regard. We got to get him on the show soon. He's talking about, the market breadth. They're asking about market breadth. And he's like, well, if you look at the Russell 2000 in an uptrend, if the Russell 2000 is an uptrend, it represents 2,000 of those 3,000 stocks in the Russell 3000. Yeah. So a simple rule of thumb for Jeff DeGraff is that if the Russell 2000 is in an uptrend, then you probably don't have a breadth problem.
Yeah.
What he's saying that people are all upset about is just sour grapes, because what's happening is that you're getting a small group of stocks that are outperforming the rest of the stocks. But it doesn't mean that those stocks are going down. It's just that a select group are outperforming. So Jeff DeGraff is like, it's not weak breadth. It's just that people are angry that they own the wrong stocks. That's his argument. So it's not a market breadth thing. It's sour grapes, which I thought was great.
And it goes back to that conversation, like the Russell 2000. What's your goal with it? The Russell 2000, I don't want to own it either, but it might be the single best information index, right, of all the major averages. Sure, we can make our own. But the Russell 2000 is packed with information. Also, I know Spencer's going to come on here and try to correct me, but it's really an equal weight index. I know it's not, but because there's 2,000 stocks in it, nothing really drives too much. So it's showing you, in my opinion, more than any of these other popular indexes that we talk about on here, it's showing you what most stocks are doing, what most stocks look like. And that's
and Ari Wald is a big proponent of that as well. And then to your point about the equally weighted nature of the Russell 2000, not a single stock in that index represents more than 1% of the index.
There you go.
I think the largest component is like 75 basis points or something like that. So you're getting
that's
very
equally weighted to me.
What?
That's equally weighted enough for me.
It's equally weighted enough. No, it's a great point, Strazza. All right, so here are my 4 charts. Here's the first one. So you see America. When you talk about market breadth, I think it's important to remember that we're not just Americans. We are Earthlings. All right, so if you guys want to go to the next chart there. Come on, guys. Who's doing the charts today? What's the matter with you guys? Get your shit together back there. All right? Come on.
It's like somebody's on vacation or something.
I can't even talk. You guys are slow with the charts. What's the matter with you guys?
Yeah.
All right. So when you talk about market breadth, I mean, I look around the world. So here's Europe after doing nothing for several decades, making new all-time highs, right? This is the broadest measure of European equities that you're going to get. This is 17 different countries in Europe. All of them are represented. These are large caps, mid caps, and small caps. So this is basically like the S&P 1500 for Europe, right? Making all-time highs. Next chart.
It still seems to me, though, that JC, look, I'm not an advisor. I try to talk to our advisor friends to kind of get a feel for their world, but nobody's talking about international developed markets. I mean, these trends have been so good for so long, but you don't hear about them. You don't hear about it. Look at this chart. It's crazy.
Well, they've been good for so long recently, but they had been so bad for so long before that. So, right? And then remember how long it takes financial advisors to wrap their heads around these things, right? Like they can't do it. So here's Japan, right? Yeah. There's Japan breaking out. Remember, this was the high in 1989. It took 35 years to break out. Just now breaking out. So that's a beauty. What else we got? China making 10-year highs.
Oh, God, yeah.
All right. Winner. Keep it in your pants over there. Settle down.
Oh, winner. Best chart. I mean, what a base.
What a base.
They make them like this, mostly for the textbooks. It's perfect. You can't not own China right now.
Yup. And then the last one here, breadth is so bad and the market is so weak that next chart, Latin America is breaking out to new multi-year highs. That's how bad the market is.
It's all working.
So weak.
No, This is great. Nice little trip around the world for you. I know Fonz looked through a lot of global charts too. I wonder what the worst looking area is right now.
It's Antarctica, because Antarctica doesn't have stocks. But if Antarctica did have stocks, they would probably be up to.
Good answer. Nice. Yeah, it makes sense.
I mean, if I were a betting man, if Antarctica had a stock market,
there wouldn't be much going on there.
I don't know. Maybe they're like trading like penguin futures or some shit. I don't know. Probably not trading penguin futures. Those would be traded in Chicago also.
Somebody
maybe
was
like ice futures. Would that be a thing? Not really, right? Glacier futures, water futures, probably.
No, but seriously, like no one lives there, right?
I don't think so.
Like, people don't live there. They do like research.
Yeah.
Somebody was telling me the government has some shady shit in Antarctica.
I mean, if you were a government and you were doing shady shit, wouldn't you do it there?
I'm just saying. I heard CMT, good friend of ours, was telling me aliens. Who knows? Russians, aliens, all sorts of conspiracy, like real good conspiracy stuff.
Does it rhyme with Martelloni?
No, I'm not going to tell you who it is. But we're doing a special event with him soon.
Oh, all right. I got one more for you here. We were talking about energy. Throw up the new slide 7 there, please, guys. This one, not oil and gas, but I think it really tells an interesting story, and that's Cameco, breaking out of this 15-year base, more than 15 years. We're going on, what, 18 years? 18,
I
19.
think this might be one of my single favorite stock market stories of my career, JC. The way that the narrative and the sentiment around these stocks has shifted just, as long as I've been paying attention, I think is amazing. This might be the best example ever of, You don't buy them when news is good. News might be good now, right? But when these guys were reversing trend, it was still the end of the world. Everybody still hated uranium. Started to hear some good things recently. But now it's like, this is like the best energy. It's clean energy. It's going to save us. This is the energy we needed. This is uranium. People used to, talk about these stocks in the same way they talk about coal stocks. And look at you now, uranium. I just love it. Just love it. Big basis. So good.
This just in, the population of Antarctica is about 1,000 to 1,200 people during the winter. God bless their hearts. To as many as 5,000 people during the summer.
You could die from the cold. So brave.
Yeah. I mean, it just seems like an uncomfortable place to live, right? And I guess the rest of the world agrees.
I'm big on comfort, so it's not for me.
We could see, Strazza. We know you like comfort, right? We know. We could see. We like that.
I didn't take
what do you think was the best monthly candle of them all?
Honestly, I'm loving what I'm seeing in China. You had like indecision candles in a lot of these Chinese indexes, and I'm cool with it. I like China. I think China back on into the end of the year. Look out. I think this is an area right now. And I'm like iffy about a lot of other areas that have done well, like speculative growth. But I think China picks it back up and makes a run into year end. I think people start chasing these stocks eventually too, JC. Baba, Baidu, the Mag 7s of China. There's going to be like a chase effect there that you see with the Mag 7s, I think, eventually. Because they're better now. They've been the better names. So
we got Kenny in the house, but I did want to point something out. If you guys can go to slide 8 there, please. So I'm giving a presentation later today on the magazine cover indicator, believe it or not. I've never done this. So
which is crazy that you haven't given a presentation on this yet. So this
I know, but my suspicion is it's probably not going to be the last one. So I'm just kind of getting going, like if it's pretty freaking good.
Who are you talking to?
Just customers at Trend Labs. Cool. People who follow my portfolio there. So if you go to trendlabs.com, check it out. You could join us at the Divergence, and we do it every Friday.
You should do a thing on this at a CMT event, though.
I know. I was thinking that.
Sorry,
but I got so many other things to talk about at a CMT event that this one's kind of like cheap. It's a cheap trick,
Yeah, but it's fun. It's fun.
It is a little fun.
It's fun.
So, I've been following these journalists for a long time so that we could fade them, obviously. And, sometimes I could kind of smell, a magazine cover coming. You can kind of smell it. And usually the best indicators are after we're already seeing price turn.
Yeah.
And so I'm smelling an energy cover any day now. Like I could
bearish.
Like a cheap, like something like this. So this one's Time Magazine. Good news, cheap oil. Bad news, cheap oil. Right. This was April the 14th of 1986. So if you go to the next chart, by the time Time Magazine came out with this one, oil had already bottomed 10 days prior, right? So oil had already made its low, historic low for oil immediately after Time Magazine confirmed the cheap oil. And then this was after a huge decline. So if you go to the next chart, just for perspective.
Wait, go back to that chart. Crude oil was that low?
Yeah, it was under
like almost in 2000?
Single digits. No, this is 86.
No, I know, but I'm looking at, like the double bottom back in 98, 99?
Yup.
Back down there? That's nuts to think.
Oh, I have another magazine cover for that low too, by the way, if you want it. But
what
we don't have all day.
My God.
I know. Go to the next one there because, you could see that crude oil had already fallen quite a bit in real terms and nominal terms. That magazine cover came after that big decline, right? So that's a big thing. When these covers come after a big move, they tend to be more indicative than anything else. So, I could smell another one coming soon.
And they're asking in the chat, is that a scoop and score in Netflix? And I don't know, it might be above 1150, it could be. But crude oil and more importantly, gasoline, those are some really nice scoop and scores right now. I'm very interested in. You see La Gasolina, what, 190? Look out. Heating oil is already doing it. Heating oil is leading the way here. Energy is better and better.
What's interesting is that I think it was yesterday. Morgan and I were in the car and we were driving, and if you guys can throw up the new slide 2 there. So Morgan and I were driving, and she goes, so this was 1999, by the way, that those lows you were talking about.
It's a dirty job.
So Morgan was we were driving, and we drove by a gas station, and she said the price of the of gasoline, which she never does, pointing to how low it was. And my wife never talks about gas prices. It's never come up in conversation. And yesterday, or the day before, yesterday or the day before, she goes, I think it was the day before, actually. She goes, look, wow. And then I'm like, what did you say? She goes, man, those prices are really low. I'm like, all right.
Did I hear that? That's great. No, I get it. That's great. Yep.
I know. All right. What do you say we bring on Kenny?
Higher gas prices. Pain at the pump.
It's been a long time coming. They ain't come from my club, they tugged it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
All right. What's up?
Where'd everybody go?
Hey, buddy.
I don't know.
What's up? Come on, let's just talk. Let's keep talking. Let's talk about inflation. Anybody notice that everything we buy is 20% higher than where it was a couple of months ago? Coffee, soda, steak, beef. This coffee.
Not eggs, sir. Excuse me.
I don't know. Depending on where you go, they might be gouging in my neighborhood, I guess.
Aren't eggs in like a 75% drawdown though?
Yeah.
Like eggs have come down in a crazy way.
So I was just reading all these bearish articles, my brethren in hell that are living through this nightmare. The same premise that they're talking about now, overvaluation, the bubble. And by the way, again, remember the idea that the stock market has to outpace inflation. So inflation's raging. I don't know if anybody's pretending that it's not. We're going to have to keep outpacing it. So that's why the market's going to double in the next 3 years. But the same premise, the same stuff that everyone's talking about today will be the same exact conversation 4 years from now when the Dow's at 80,000 and the Qs are sitting there at 1,200 and the S&P's also put another 100%. My name is Kenny Glick. I'll see you in 3 years. Take care. I got nothing else.
So he's talking about asset price inflation.
I can't tell if he's serious. Are you serious? Okay.
Great. Yeah, he makes a good point.
All right, he's gone. Yeah. Well, I can't argue with it. I can't.
Are there any earnings you wanted to talk about the Berkshire?
Can we just do I know we have Katie here. Let's just do two things before we bring on Katie. Okay, first things first. We have the chart of Berkshire. Yeah, I mean, I don't know what there is to say about this other than it's Berkshire Hathaway, right? I know a lot has been made about the performance of this stock, and I think we have it marked up since Buffett announced he was stepping down, or I guess retiring, whatever you want to call it. So it's been a bit of a drawdown since then, but the quarter was outstanding. It turns out when there aren't like natural disasters, the insurance business is a really, really good business to be in. So
as it turns out,
there wasn't a ton of natural disasters last quarter. So they did great on the insurance front. Everything is all-time highs, right? Cash reserves, net income, profit, the whole thing.
And the insurance business is pretty damn good from what I heard.
Yeah.
And also just from a technical perspective, right? Spencer is talking like a true, Berkshire Hathaway shareholder, where he's like, the stock hasn't been good. This is a bad year for Berkshire. Stock's down like 11% from its highs, 12% from its highs just earlier this year. That's how this stock corrects, right? So has it been a bad year? I mean, talk to people sitting there holding like speculative growth stocks, wearing 60% drawdowns, a couple times a year. Berkshire is just a hell of a stock. The resilience through corrective periods, really, to me, it's one of the best periods.
That's an amazing point. That's an amazing point. This is as bad as it gets. I mean, not really. I guess it can get worse, but a 10, 11, 12% correction.
I mean, it must be a pleasure to own this over the long run.
Oh, it is.
Yeah, sure.
It is.
I'm sure.
That's right. Anyway, and then I wanted to mention two other things real fast. Kenvue.
On that note, by the way, don't forget, guys, a big reason it's been underperforming so bad is because it has so much cash, because we're in a raging bull market, but they've been raising cash. So they're underperforming.
right.
Because so listen, I've studied every bull market ever, and I can tell you for a fact that during bull markets, investors that own stocks make a lot more than the investors that don't own them, right? Or God forbid, are short. And this is one investor that has decided that they want to own less stocks, and therefore they've been underperforming in a bull market. I mean, doesn't that make sense?
It's not just that. They were also net sellers of stocks last quarter. So they were not even net buyers. They weren't even buying.
Right.
So,
I mean, they were buying.
Of course, you're going to underperform, right?
Well,
Isn't that common sense?
Yeah, but you know what? Like, give Berkshire a break. Look at any insurance stock relative to the S&P 500. They mostly underperform in bull markets too. I mean, it's insurance. It's low volatility, high quality business. So I think that's just kind of what you get. It's not Berkshire. It's the business that they're in, especially now that they own so much less Apple and the banks.
Wait, two things real fast. Kenvue. I don't know if it's Kenvue or Kenvue. They had earnings.
Tylenol.
Yeah, they had earnings this morning, but that's irrelevant now because they're getting taken out by Kimberly-Clark for a nice premium on that. $48.7 billion.
Who said staples were boring?
Everyone. So anyway,
that stock had fallen off a
Kenvue,
cliff, though. I mean, that stock literally looked like it was going to zero. Like they just got saved. If I was Kimberly-Clark, I would let it keep falling, right, JC?
Yeah,
I mean,
well,
let it keep going. See what kind of a deal you can get. Thing was showing no signs of bottoming at all.
Yeah, so this was a Tylenol thing. So Kenvue is up 17%. Kimberly-Clark is going to be down this morning. They're down 15% on this headline, but that's pretty normal. The last thing I want to say is
15%.
Last thing I have is DuPont DD it's not actually down 57% this morning. There is a spinoff. So if you are a shareholder in DD, you now have DD and a new ticker. We have a new single letter ticker, everybody. Ticker Q is back on the table. So
what is it?
That brings us to today. That's the spinoff. I don't know what it's called.
Unity Electronics?
Yeah. This brings us to today's trivia question. Name the letters of the alphabet without active stock tickers in the U.S. Does anyone know? The single letters.
E. No, that's that energy company.
M is Macy's.
What's G?
M is Macy's.
What's G?
Genpact.
H.
No,
there's no I. There's no I.
What's his face? That guy that ran the New York.
There is no I. There is no I. There used to be an I. There is no I.
What's his face?
Correct.
Was it Dick Grasso? A New York Stock Exchange guy. Was that his name? Was that his name?
Yeah.
So he would save M for Microsoft forever, trying to get Bill Gates to move over to the New York Stock Exchange, and they never did.
Didn't do it.
There's no N either. There's no N.
There is no N. That's right. There is no I. There is no N. Very good. You are almost halfway there. There's three more. Rick got one in our little chat here.
Hey, before we bring in Katie, can we show?
Is there T?
Yeah, AT&T. Can we show up slide 2 there? Just kind of going full circle.
Yep. Tommy Lackey in the chat. P. There is no P. Oh, voice crack.
There's no
I. There's no P. And then last two were kind of a trick because they just got taken over.
What are they? Just tell me.
X and Y.
What are they?
X and Y.
No. There's a Y. It's Allegheny, whatever, isn't it?
No. Berkshire took them out, I thought.
Oh, X is United Steel, though. What are you talking about?
No, they got taken out too.
Whatever. There's X and Y. Whatever. Okay, I get it. Fine. All right, that was good. That was a fun game.
That's what I said. Okay.
So there's your other low, Strazza.
Dude, look at that. Wow.
You like how I use the arithmetic scale just to really?
No, I don't. I think it's a cheap trick, and I don't like it. I've been seeing that more and more lately, and I hate it.
You don't think it really makes the point of that magazine cover there?
No, it's obnoxious and misleading.
Misleading? I don't know about misleading.
Yeah.
Obnoxious, maybe, but not misleading.
It makes it look like one same percentage move is bigger than another same percentage move.
Dude, it went up 15x from that magazine cover.
I'm just saying, you don't have to do it. You could log your scale and not act like a psychopath.
Psychopath is a little strong there. Obnoxious, I'll take. Egregious, maybe.
Ask Katie Stockton. Why don't you do that?
I think Katie's gonna be with me on this one. She's gonna be like, nice, Jay. Nice. Katie's old. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Katie.
Hey, good morning, JC.
Good morning to you. Thank you for being here.
Of course. Good to be with you guys today.
I was just singing your praises, Katie. I don't know if you heard.
I did hear, and I appreciate that. I don't know how I feel about the scale, though.
You think I'm being a little too obnoxious there?
No, you're making a point, so I get it. I totally get
it. So I'm giving a presentation later today. Sorry for my voice. My voice is in an uptrend, believe it or not. It was basing over the weekend. You know. You know how it is, kids in school and the whole thing. Right?
I totally get it. So you're presenting later today?
So I'm giving a presentation on the magazine covers.
Oh, cool.
So it's kind of been in my head over the weekend. How do you think about that? Do you keep an eye on them?
I don't, not really. But obviously it's a good read on sentiment. And I do think as like a counter trend input, in addition to all the stuff that's more measurable, why not put it in there? It's just weight of the evidence, right?
100%. I got two takeaways from my studies, the magazine indicator. It's two things. Number one, the most valuable opportunities come when you're already seeing something in the market through price and momentum and relative strength. And then all of a sudden the cover comes on to confirm that.
Yeah.
Like, like the dollar in 2016, we were already looking for a dollar rollover. And then Muscle Man on The Economist, George Washington, it was like, perfect.
There you go. Good. Yes. Perfect. Validation, right?
Yes. We were selling tech stocks in early 2020, right? A lot of divergences, selling tech stocks. Then in February of 2020, The Economist comes out with like those stampeding robot bulls.
Mm-hmm.
Right? I don't know if you remember.
Yeah.
Perfect.
I can kind of picture it.
So that's takeaway one. When you're already seeing something and then they confirm. The second takeaway is when there are multiple magazines with similar covers is very powerful as well.
Yeah. And it's in following with, when your taxi driver asks you about stocks, certain things that kind of give you a little bit of a sense things are overdone. And I don't know though that, with the equity market that we really have that yet. Like, I don't feel that kind of sentiment per se, maybe in different pockets, right? Like rare earths or, AI, of course, but I'd say broadly speaking, it doesn't really have that feel to me. But the VIX, weirdly, last week, I don't know if you noticed, it was up 6+%, and the S&P was very firm. So it's kind of a weird dynamic.
I'm glad that you brought this up. I've noticed, odd pessimism with the S&P 500, NASDAQ, Dow, and Russell 2000, and Russell microcaps all closing at new all-time monthly closing highs, and people are kind of upset. You got the VIX at 17. It's like, what is everybody so scared about? So I'm glad you brought that up. How do you think about that divergence between what you're seeing in price versus what you're seeing in, sentiment out there?
Well, I think we had to reconcile time frames importantly. If we look at the VIX versus a short-term support level, we're watching the cloud model to that end. It's around 16.4 for the VIX. And as long as that's intact, I think it preserves the potential for a little bit of an aftershock on the back of what we saw in mid-October. But you saw how long that mid-October pullback lasted in the inversely correlated S&P, right? It was very short-lived. So I think we have to reconcile that these are very bullish long-term setups, right? New monthly closing highs, great. Russell 2000 on the verge of a major cup and handle breakout, great. But it doesn't preclude, of course, a pullback. And, these days pullbacks last days, not weeks. So we'll maybe take the next one and look to add again. But we do think there is somewhat elevated risk right now, in part based on the VIX, of a short-term pullback, something that will give us a nice way to position, maybe even into year end for a so-called Santa Claus push higher. And there are some downturns. I'm sure you notice also on the daily stochastics, brand new. Just really
tell me more, because I know I was just saying before, Katie looks at markets in different ways than I do. Katie uses more indicators and oscillators than I do. So I love that. Please tell me more. So tell me what you're seeing in the stochastics.
Yeah, so the daily stochastics we see as like the most tight sort of momentum input, but it also gives you a sense of whether things are overbought or oversold. An overbought threshold is 80%. It's when you see the stochastics fall back below, that's where we feel we have like higher risk of a pullback. And that's what happened on Friday into today for the future. So we feel, just more weight at the evidence for a pullback combined with the VIX reading, combined also with somewhat kind of meh, like, short-term momentum. It's not great. The mega caps have still been the primary contributors, I feel like, to the strength, certainly large cap tech more broadly, maybe. And so, some of them look great. Some of them don't look great. I think you could probably guess which ones I would pick, right? So I think that kind of tug of war now has yet to kind of prove out. But with the mega cap earnings out of the way, it would make sense maybe that the market's relieved of that overbought condition through a pullback.
When you talk about the Russell 2000 on the verge of a potential breakout, what do you need to see to confirm where it's no longer on the verge and it actually has?
And you could argue that it's already broken out. We always like to see with right. So it's like, it's kind of right up there. For confirmation, we always like to see a certain duration above. And if it's like a major breakout, like we have potentially in the monthly chart, well, theoretically, we'd want to see two strong monthly closes. I think the level is 2460, thereabouts. So it would be great to have that for confirmation longer term, but you could argue that the breakout's somewhat decisive when you look at the weekly chart. So we're just not jumping on board with it yet I would say we're not buying it yet, right? Because we do think that there's still risk of a pullback. And it's kind of a natural place also for the S&P to pull back, even though there's no resistance really on the chart. If we go back to that June breakout, that breakout allowed for a measured move of about 68.80. So that basically came in line, and it's not necessarily the stopping point of the cyclical uptrend, but it is a natural place, I think, for the uptrend to take pause. It would be pretty normal, I feel like, for that to happen. Why does the market move this way? Why can we, rely on these objectives? It's very simply assuming the trajectory of the trend will maintain itself, or not the trajectory, but sort of the magnitude of that trend. It did happen a lot faster, I think, than we would have expected. We were looking for more Q1 to that level. But now that it's in line, we just respect it as a normal place for consolidation to unfold. And I mean, you could argue gold did the same, right? We had gold get up to, some objectives on the chart and finally now taking pause. But these are all, whether or not we see, honestly, a pullback or consolidation that's meaningful more than just a few days from the S&P, it's all within the context of that bull trend, right? So we can't ever lose sight of that. So I know what happens is that people get very caught up in like sort of a bearish counter view. But in reality, it's a bearish counter view for maybe like a couple weeks, right? Whereas like the long-term uptrends look really very healthy.
How do you think about global markets here? People, big hot topic these days has been market breadth. When I look around the world, I see London FTSE 100, new all-time highs. I see the Euro Stoxx 600, broadest measure of European equities, all-time highs. Japan, all-time highs. Shanghai Composite, new 10-year highs. Latin America 40. I mean, the market breadth is so weak and the market is so terrible that Latin America just closed a new multi-year highs. That's how bad things are out there. So, when you think about, global markets, how does that weigh into your weight of the evidence?
I mean, listen, like anything that's a confirming factor like that, where we have new highs being registered around the world, that obviously helps enhance this global bull market. I would say in terms of we watch the ratios just to understand the relationship, because our advisor client base is interested in how to position an international relative to US. So it makes sense. And I think it's pretty meaningful what we've seen in terms of rotation into international. And it started earlier this year. and has taken pause in some places. But we've definitely seen what I would call a loss of long-term downside momentum in those ratios, meaning long-term underperformance by international versus US seems to have at least come to an end for now, right? It doesn't mean it's going to last for a couple of years, not necessarily, but I'd say there's even some indications that it could. So I think there's a lot of opportunity there is the way I see it. New highs are usually bullish. You've got the ratios that have turned in favor of some of these markets, and some of them don't have the same sell signals from the DeMark indicators that we have here in the US. Those are here in the US primarily because US has had that tech leadership. So you're getting a bit of a concentration in these either market cap weighted indices and or market leadership as it pertains to technology. So there are some signs of exhaustion there. But again, with consolidation, we would want to view it as healthy, especially the AI trade. When I think about AI, it's everybody's like, is it over? I'm like, no, I doubt it. I mean, first of all, it's still going, right? But in reality, it reminds me only to like the .com era in that at that time, we saw such good momentum across the board, but then it had this big shaking out of like the weaker companies. And I think if there's any takeaway, pertaining some kind of bubble activity, which it doesn't really feel that way to me.
I think there's a bubble in people talking about bubbles.
Yeah, I know. I love that. It's a good CMT quote, right?
Is that a CMT quote?
Yeah. They were saying it at the last conference. I can't remember who said it, and I've stolen it myself.
Nice. Yeah, I don't make up anything. I always take
It's fun. And it's true, honestly. It's like there's so much chatter about it. It's something to talk about, right? So people, it's kind of preying on their fears in a way. But in reality, it's a good uptrend. It's got broad participation, and it's certainly not as steep, in my opinion, as what we saw in the .com era. But at that time, when we did see the major pivot, and maybe this time it just becomes a correction, right? That kind of weakness can help the market determine the winners and the losers. So I think maybe it becomes more of a fundamental question as to which of these companies are the survivors, because we know not all of them will be. So I think maybe the fundamentals will become increasingly important for the AI companies, as we proceed after this huge run up.
Katie, shifting to, a different sector. So, the way I learned it from our boy, Ralph Acampora, was that sector rotation is the lifeblood of a bull market, right? And, healthcare was, an underperformer for so long, then it became the best sector, right? So things are rotating. So, I'm seeing crude oil down at lows, energy's left for dead, super high short interest by speculators in the futures market, historic short interest in oil services, E&P names, even the XLE super high short interest hitting new 52-week highs.
Mm-hmm.
And, Saturday I was driving with my family up to the lake, and we drove by a gas station, and my wife, who never talks about the prices of any assets, goes, "Wow, look how low gas prices are." And I'm like, what did you say?
Good to know. Yeah. So she picked up on it too. I know it is something that we've also picked up on, and we've really only just recently started talking about energy more with our customers because we feel the same way. Things appear overdone. I think it's too early to be convinced that a lasting turnaround is underway. We don't have enough evidence, from the DeMark indicators, from our divergences, et cetera. But we do have some evidence, right, that an important low was established already by crude oil back in the springtime. And then also that was like a long-term oversold reading on the monthly chart and a nice reaction to it. Retests are terrible. They're really hard to live through. So we're basically undergoing that as we speak in energy. But the stocks have anticipated something in the way of a meaningful turnaround there, I think. And we've seen some breakouts. Look at Schlumberger or SLB.
Yep.
Nice little basing phase there. And it seems to be lifting out of that basing phase, at least as of last week. So I think there's some signs of life that are really interesting. And if any of your viewers are less constructive on the S&P 500 or technology, well, energy is a very viable option because we know it has the potential to do well, even if it's a weaker tape, right? Because it's kind of its own segment. It's not just its own sector. It's tied to things that are external to the equity market, right? So that's almost a positive differentiator when it's a weaker tape. We saw it in 22. Of course, it was the only sector that was really substantially in the green. And so if any of the viewers are more bearish leaning, well, then that's all the more reason, I think, for them to look at energy. In our ETF, we don't own energy yet. It just doesn't have enough of the momentum shift to warrant it. But we're very long-term in focus there and, sort of a slow-moving ship as it pertains to long-term momentum. There's always counter trend opportunities within that context. And in fact, healthcare, we're constructive in our research. We have an overweight recommendation. Same idea. It's, we're not quite there yet on energy, but already we have enough of a turnaround there to warrant at least sort of a short to intermediate term upward bias. And I don't know if it looks like you guys use Optuma. So on there, the RRGs, like a 12-week RRG, shows that there is rotation underway. It affirms, of course, like what you're highlighting and feeling about the markets. And it does not look great for tech, frankly. So, we haven't seen any impact from that yet, but tech does look a little tenuous in that RRG or relative rotation graphs sort of circular motion. So it'll be interesting to see what happens. But it does, the market, or at least the perception of the market via the S&P 500 is still so largely tied to tech and to the mega caps.
But then I look overseas and I ask myself, how many tech stocks are in the, FTSE 100 in London? The answer is 0, right? How many tech stocks are in the German DAX? 1. How many tech, right? So how many American tech stocks are in the Nikkei? 0, right? So like, I think about, the rotation, because, when you study all the bull markets throughout history, and obviously I know you have, very few people have, as it turns out, but I know for a fact you have, technology is a leader and an outperformer in almost all of them, and while concentration has certainly been in the mega cap names, small cap technology is actually a leader in the small cap space too. In fact, over the last 3 months, small cap tech has massively outperformed mega cap tech. So for me, it's not it's only a few names in technology. It's technology, right?
Yeah, you could even narrow that in further to semis. So semiconductor stocks tend to also be like a primary source of upside leadership in bull cycles, especially, when they're still going strong and not maturing, right? So I think people should take some, sort of solace in the fact that the semis are still doing really well. And honestly, NVIDIA almost looks like it's a bullish flag pattern, which is wild at this point, but we want to respect the bullish action where we see it. Microsoft does not look so bullish, right? So within the tech sector, there's definitely some, dispersion. But even still, as long as the semis are outperforming, it's a tough tape to counter trend. And, it can be pretty dicey. We always tell people that it's not advisable to short stocks that are at new all-time highs. Just period. No. We just stay away from it. And listen, we're DeMark followers, so we are often using exhaustive signals that are registered at new all-time highs. but it's, when you have resistance or you have a downtrend line, or you have just more.
Yeah, but to your point, Katie, just because you're tired doesn't mean you're dead.
Yeah, it's a good point. And it's so much more difficult. And I think this market has been just so exemplary of that, to capture these pullbacks. I mean, it's really been impossible. And, we'll spend all the time we have trying to figure out why this is happening, but it is happening, right? So we just have to respect it. It's, market structure and ETFs, passive versus active, all that stuff matters. But we're almost just well served to spend more time trying to, leverage it, right? This kind of environment. I've started using the 20 days way more, because the 20-day moving averages have just eliminated all the noise that have appeared in the other traditional indicators like the MACD. So if you look at a daily MACD, it's not really helped a whole lot, and since the April that was established. So we just have to adapt to the current environment.
I hope you guys are paying attention because what Katie's essentially saying is that, she gives more weight to certain indicators and information in some markets and less in others, right? So she's adapting how she's weighing certain evidence more or less depending on what the market is doing. It's really, really important. Something I rarely see. So kudos to you. You mentioned Nvidia hitting 5 trillion. Katie, I know you're a technician, obviously, but I've been told that Nvidia is too expensive for like a few $1 trillion now.
Yeah, I know. It's a pretty staggering number. It gets like to the point where it's so many zeros, right?
How many commas are in? I don't even know how many. Commas
I know.
zeros.
Yeah, it's funny money at that point, isn't it? But
difference?
listen, it goes to show where the market's rewarding certain companies, and I wouldn't want to fight against that by any means. But I think you could certainly argue that they're overvalued. But the hard part, as you know, as a technician, does it matter yet, right? Is the momentum still there or not? But as soon as we do see, the loss of relative performance that's more meaningful from tech, we will certainly respect that and start to, manage risk through that. We're already recommending, as of just 2 weeks ago, that folks be partially hedged, 10, 20%, something in that range, just to cover some of their higher beta exposure, because there are areas that are almost parabolic. When you look at like the Seagates and the Western Digitals type, those are such steep uptrends. So rather than counter trend, though, you can manage risk from a top-down perspective.
Katie, I know the market's about to open and you got to hop. You've given us a lot of time. I really appreciate that. But I was just mentioning before that, how much I hate you because you got to take a technical analysis course in college. Like, how unfair is that?
I know. I had totally a leg up through that, right?
It's so unfair.
It was really good. And I graduated with level 1 of my CMT because the final exam for that class was taught to level 1. So that became our final exam. So yeah, that doesn't happen anymore. So nobody should get excited because we were very fortunate. But there are a lot of great programs. Baruch, I just did a talk for that class there, and they're really on top of it. And so I think it's great to see it integrated into more curriculums.
I mean, I'm talking to freshly minted CMTs because I'm sponsoring, friends and, employees and colleagues all the time these days. And, I'm like, what number are you? And they're like almost at 4,000. They're like 3,500, 3,600. I was like 900 something.
I actually don't even know what my number was, but that's it's fun to think about, isn't it? And the growth is there. And I love the affiliations with the other organizations like the CFA Society. In fact, I've done more talks for the CFA this year probably than CMT even.
Well, they need it, Katie. Right?
I know. We'll try. Spread the good word, right?
Yeah. I have to. CFA has been great. I spoke at the CFA Society in Manila years ago.
Wow.
I mean, just for perspective. So CFA Society, first of all, they have a ton of money. Their balance sheet is crazy.
Yeah,
right?
I'm
So,
sure their numbers are crazy. I mean, we talk about 4,000, 5,000 CMTs, right? It's exponential versus that. And but it's great. I mean, they've really started to pay attention and listen. The last talk I did for a CFA Society had voodoo in the title, though, so we still have some work to do.
That's all right. Listen, the old saying, and it's true. I've seen it firsthand. The CFA helps you get the job. The CMT helps you keep your job.
There you go. Love it.
So that's it. Katie, tell the folks where they can find you. Tell them about the ETF.
Of course. Yeah. So we manage an ETF. It's Fairlead Tactical Sector ETF, TACK, or TAC is the ticker. You can buy it anywhere pretty much. And you can find more information. Our website is fairleadstrategies.com. You can find me on Twitter or LinkedIn, and I encourage you.
Thank you, Katie. I really appreciate you being here.
Of course. Good to see you, JC. Have a great day.
Katie Stockton, legend.
Awesome. That was great.
You like that, Spencer?
I like when different flavors of technicians come on, right? Because that's sort of one of the beautiful. I mean, that actually applies to all of investing. Is there's different strokes for different folks, but specifically within the CMT world too, there is no right way to do it, right? And everyone looks at different things, and that's the beautiful part of it. So, yeah, I that was awesome. Thank you, Katie. That was great. I know we have Sam. Sam, I'm going to bring you out real fast, and then we'll hop because the markets are open, and we got things to do and trades to make and people to talk to, and JC has tea to drink. So I'm bringing Sam out, and then we'll do this. The first question for Sam is, where in the world are you?
I am in Naxos, Greece.
Naxos.
Beautiful Naxos. Yes.
Is that like N-O-X? How do you spell that?
N-A-X-O-S.
Okay.
Yeah, one of the biggest Greek islands.
Oh, apparently JC's
JC
favorite
says
island.
it's his favorite island. He's been telling me to go get my feet rubbed by some pretty Asian women here. I have not done that yet, but I've been thinking about it. I guess. Yeah.
All right.
No. I want to give a big shout out
to nobody said that they were pretty Asian women. I said outside of Tortuga in Naxos, get the sea bass carpaccio, and there are Vietnamese women who will give you a massage on the beach. Nobody said anything about their looks, for the record. Keep it in your pants, Sam.
He didn't say they were pretty Asians. He said they're pretty Asian, right? There's a slight difference. Right? That's what he said. Okay. Sam, you have a couple of charts for us before we hop?
I do, but first of all, I want to give a huge shout out to Katie Stockton. I'm such a huge fan of Katie's.
Didn't you just see her?
I was going to mention that. Yeah, I was just with her in Dubai for the CMT event, and I actually got to speak with her for a few minutes in private, and I learned that she's one of the youngest CMTs ever. She was 22 years old whenever she passed her CMT exams, and I was actually the same age, so I think I'm doing something right, Spencer.
All right.
You know, and I didn't get to take any technical analysis courses while I was in college, but, you know, reading those 1,000-page textbooks for the CMT curriculum, you know, pretty much was like taking a course in college.
Well done.
For technical analysis. So, yeah. Huge shout out to the CMTs. Huge shout out to Katie Stockton.
Oh, look who's back.
Chief Duck Eater. What's up, Steve?
Yeah, try to be less creepy when you come on my show. And now tell us, what are you seeing? Are you still looking at charts out there in Greece?
Dude,
what do you like?
I'm looking at a lot of charts. So I have a hard time not mentioning the Amazon. So if we could pull up slides 27 and 28.
So good.
What the hell of a
and
reaction.
Somebody in the chat just said Microsoft doesn't look bullish. I think it still does. Sam can probably elaborate and tell you more about their earnings reaction, kind of like how we're thinking about that. But you don't want to sleep on any of these Mag 7s, right? It was down for a day, maybe 2 days after earnings, what was a really good report. How many times have we seen this, Sam, where the Mag 7s, when maybe they don't reward the report at first, they dig in and they go, it's just like time and time again, all cycle, no?
Totally, man. And, you know, Amazon, relative to its Magnificent Seven peer group, it has been a laggard. It's been range bound for a long time, doing absolutely nothing. And for 5 consecutive quarters, this stock was punished for its earnings reports. And that changed in a major way last week when it rallied nearly 10% after its earnings report in a textbook gap and go to new all-time highs. If you want to show that on the next chart.
We should mention should mention that Amazon has news this morning. They just announced a deal with OpenAI. It's a $38 billion partnership under which OpenAI will, I guess, use AWS. So
that's probably not bearish.
Dude,
I bet it's up this morning.
Who's not doing deals with this company at this point? I mean, OpenAI is literally, they said this would be an AI-fueled bull market 2 years ago, right? We didn't know what that meant then. We were just like, getting like the big banger NVIDIA reports, right? They said, it's going to be an AI-fueled bull market. This is what they're talking about. These guys are doing deals with everybody. They seem to have all the money in the world right now, too. They're buying everything from everyone.
Well, there was a headline last week that they're from Reuters that they are preparing, they meaning OpenAI, are preparing for an IPO as soon as the back half of next year at $1 trillion valuation. So when you're worth $1 trillion, you can do kind of whatever you want.
That'll be the top. This cycle.
Maybe.
When they
I was saying that back in
that'll be that
Toronto, actually.
Yeah.
Like the top will not happen until OpenAI goes public.
Yeah.
Like that would have to be the thing, right? Like when you look back, and we're always looking back and saying, oh, how poetic, right? This happened here. FTX blew up right at the time to buy Bitcoin. Oh my God, right? Like we see this every time. It's going to be like that for OpenAI. Oh, that was the end of the AI-fueled bull cycle. Yeah, that'd be perfect. I would love that. You guys would like that too, right?
Maybe. Yeah.
All right, what else?
If you want to go back to that last slide too, I want to give a shout out to one of Steve's favorite companies, Coinbase. So Coinbase has been one of the worst S&P 500 earnings reaction stocks. I think for 6 consecutive quarters, this stock was punished for its earnings reports. And again, like Amazon, that changed last week. And I don't have the chart with me, but everybody can see this massive base in Coinbase.
Let's get some follow through. And again,
let's get some follow through. I think it's time for the Coinbase. The fundamentals have finally turned.
And like Amazon, it's at a big level, right? And you want to see this kind of action, like this double breakaway gap that you're getting in Amazon. Like this is sick, by the way. You got the earnings breakaway gap out of a pattern, and then you're like, oh, we need follow through. And then you get another follow through breakaway gap the very following session on an OpenAI headline. Do you think they plan this? But you need to see that for Coinbase, right? That's like kicking off a new uptrend or a new up leg, at least, when you see that kind of momentum at big levels. So I'd like to see that for Coinbase. You know.
Yeah, I like it a lot. Yeah. And the Chevron rallied after earnings. You know, energy's looking pretty interesting. If those big boys can start resolving those massive ranges, look out for energy.
Yep. It's you're absolutely right. That's what we need to see from energy to get excited, is that confirmation, right? That momentum out of the gate, that starting line momentum. And I mean, I'm biased because I do have some positions on, with some breakout multiplier trades on. We keep taking shots and being too early. But like I was hoping that it was going to be Friday on the earnings reports from the two majors, Chevron and Exxon. But you didn't get much, right? Chevron was good. Exxon was like a nothing burger, I think.
Right. Yeah. I think we still need to see more, but it's certainly trending in the right direction, Steve.
Yeah, and Chevron, this piece of shit, is giving it all back today. So
classic.
Energy still messy. Yeah, down a bit here today. And First Solar also stands out from your table, Sam. That's just been an incredible stock. Nobody talks about it. This is also an AI name. This is part of like the AI infrastructure, and it's doubled off the April lows. So it's been a really good stock again.
Totally. And it's not even the best solar stock. You know, we've seen some huge moves in solar.
They've woke up. No, like maybe not across the board. Enphase is still garbage, but like SolarEdge and some of the others have really been running, no?
Totally. Yeah. I think it's a new bull market for solar.
It seems that way. It does. I know people were talking about the DQ too the other day, but look at Canadian solar. Look outside the U.S. for some of these solar plays, huh? Look at CSIQ. That's a short squeeze, Sam. No.
CSIQ.
Is that a short squeeze? I mean, the earnings aren't until 2 weeks from now, and this thing has been flying. Just the last week here.
Yeah, 21% short interest.
Yeah, that's
Canadian
a squeeze. That's a squeeze. You can see it right on the chart. That's what that looks like. That's why Sam does his scan. Freshly squeezed all the time in environments like this, because we see this left and right during the good times. Just the worst stocks becoming some of the biggest movers day in and day out as the shorts get absolutely obliterated.
I think there's also probably some like macro solar-y headline, but yeah. Generally.
Why you always have to rain on our
No, I'm just saying.
Why can't fucking Spencer?
I'm just saying.
Spencer's the guy who writes for like the journalist, like it's a technical move. What
No, I'm not. I'm just saying, if you look at other solar stocks, they look, a lot of them are going up. So I'm just making
fuck what I said then. I guess.
Okay, whatever. What was I going to say? I lost my train of thought.
Can I show a few more charts, Spencer?
Yes,
I think these are really important charts.
Please.
23, 24, and 25. So, start with 23. The Dow Jones Industrials and the Dow Jones Transports. This is technical This is textbook Dow theory right here. You know, if it's a bull market, the transports should be confirming the new highs in the industrials, and that has not been happening. You know, this has been one of the biggest red flags in the market. You know, there's not a lot of red flags. You know, a lot of things are working right now, but this is something you can point to as a bearish data point. So, you know, if you are a bull right now, you want to see, and I would argue you would need to see the transports pick up and make new highs. And I think that's what we're starting to see. If you look at number 24, C.H. Robinson, one of the largest trannies in the world, ripping to new all-time highs on the heels of its best earnings reaction since 2012. And this isn't the only one. I'm not just cherry picking CHRW out of the transports, but this earnings season, we've seen several historic earnings reactions.
That's trucking, Sam?
Right. Yeah. If you can look at something like JB Hunt as well,
Yeah.
another one that comes to my mind, just had one of its best earnings reactions ever. That's not something you tend to see when the fundamentals are deteriorating. You know, that's what you see when the fundamentals are turning a corner and you're starting to see that technical confirmation.
That C.H. Robinson chart, man. If you're going to buy anything in this space, it better be that. This chart looks like better than anything I've seen in transports.
Totally. It even looks better than Uber.
Yeah, a lot better.
Yeah, Uber's a mess, and it's like I think it's the largest in the iShares transport ETF.
Look, and what you said about transports too, not confirming, it's a fair bearish data point right now. It really is. You could. You know, somebody could say to you, yeah, but Sam, look at the semiconductors. They're more important. I'd say, okay, sure. And then somebody else could say, but look at the home builders. They're really important too, and they look like shit. So you are getting, I would say, more mixed data than we've had in a while, right? The bearish, the list of bearish evidence is longer today, certainly than it was coming into last month.
Totally. And I think you can overlay something like the transports with the Russell 2000 ETF, and they're the same exact charts. And if you talk to somebody, Ari Walt, he believes that small caps are a really, really big deal in that whole Dow theory confirmation concept. So like if you see the small caps break out to new all-time highs, but the transports aren't confirming that, I think that's also a really big deal. You know, it's not just the Dow Industrials, but it's a really important chart for the broader market.
I want to see them both go in a big way. You know, Dow went. That's a good thing. The equal weighted indexes seem to be going. That's a good thing. All right, what else you got?
Can we just talk about the equal weight index? So I just had my most viral tweet over the weekend ever.
Oh, I saw that. It was a great tweet.
This will be my last point for the day.
It was an excellent tweet.
Number 27. People's heads were exploding. I said stocks have gone nowhere for a year, and it's an AI bubble. Just because a handful of stocks have gone up a lot over the last year doesn't mean this is an unsustainable bull market. People have made too much money and everything's going to crash and burn. You know, people are just so convinced that it's a bubble and everything needs to crash and burn that, you know, I think stocks have legs because of that. You know, you don't see major tops when everybody's pessimistic like that. You see major tops when everybody's on the same side of the boat. The bullish camp. Everybody's betting that there's no downside risk in the market. That's exactly the opposite of what we're seeing right now. So I'm buying stock.
I kind of feel like the people that know are all pretty they're all pretty bowled up right now. It's the people that don't know, Sam, right?
And so that's true, Spencer.
But like, I don't know how heavily you can weight that.
Good technicians, you know, like we are the minority out there. A lot of people are convinced that this is a bubble and it's unsustainable and it needs to crash and burn. You know,
that's a good question. I feel like a lot of times you bring up a very good point, and everyone here lives in their own little echo chamber, and we have to work hard to see beyond those walls. And it's hard to know. I think it's hard to know whether you're in the majority or the minority. If you talk to certain people and they share your opinions, and you can believe that that's the majority when it's not so. So I don't actually know, Sam. I don't know who's in the majority. I mean, it feels like everyone that we talk to is pretty bowled up right now. So, but then I go on the Reddit and I see 500 posts every weekend about an AI bubble, right? And so I don't know who the majority is at this point. But
Sam, would you say market breadth is better now, the current run we've had, or last year, the run we had in really the back half of the year, to and through the election? Like, what was a better breadth environment in your opinion? Because I think it's actually, I think a good argument could be made in either direction.
Yeah, and I think it goes back to what Jeff DeGraff was saying. JC mentioned it earlier in the show. If the Russell 2000 is breaking out to new all-time highs,
yeah, you have that.
Probably don't have a breadth problem, and that wasn't the case last year.
Yep.
The Russell 2000 reached that prior cycle peak, and it got slammed exactly where it was supposed to. But now we've seen the highest weekly and monthly closes ever. So
that's a great point. And I would say I would make the argument that way, and with speculative growth too. I think speculative growth has been a lot better. So while there's other things, yes, that aren't working, and breadth could be better. And you could even say like it's been a bit thin, not thin, but led in a big way by the biggest stocks again since April. But then, do we not see that like constantly in bull markets? The best stocks doing the hardest work or the heaviest lifting. So I think it's okay. This has been a great conversation.
Yeah. Thank you, Sam. Everyone, enjoy the rest of your Monday. Go make some money. Wow, we went long today. That's cool. Thank you to Sam.
I could have gone 10 more minutes, Spencer.
I know. Thank you to Sam and to Katie and to Kenny. I want to remind everyone that Kenny will be live at 11 o'clock. He's live every Monday on the channel for the long and short of it. Short request live every Monday on this channel at 1 o'clock Eastern.
Hey, new host today.
What?
New host for Chart Request Live.
Is that true?
This is not an episode you guys want to miss. You better be there. Bring your best tickers.
I don't think I knew
about this.
Tell him. I knew about this.
Can I tell him?
Yeah, tell him.
Our all-star analyst, Mr. Ricardo, is going to be on Chart Request Live today.
Popping his chair.
He's one of the best analysts I know in the entire world. He's taught me a lot about cycle work and really junky Fibonacci analysis. He is really a very talented technician, and he has something to teach you today. So don't miss this episode.
Thank you, Sam. That was so eloquently put. Basically, the people want more Rick. They said, who is this guy, Rick? He's great. Can we have more of him? We said, okay. So, that's how it works here.
It's 1 o'clock
awesome.
Eastern time. If you have any requests and you want to jump the line, email them to the email on the screen. They'll do the inbox first, and then they'll do the questions from the chat. That's what we got. Thank you. Go make money, and we'll see you tomorrow. All right. Here's tomorrow's guest,
buddy.
Before we go, tomorrow's guest is Tommy Lackey. Going to be a good one.
Oh, nice.
Thanks, guys.
Adios.
I can't take no loss. I don't even know what it costs.